Hey Jay, welcome.
Jen, nice to see you again. Thank you for having me.
It's great to have you. I'm so excited about our opportunity to talk about insurance marketing, and some of the challenges and successes that we've seen. Today's going to be fun. We'll have a few different opportunities and a few different topics to cover together. But to get started, I would love to introduce you to the audience, but I'm going to ask you to do that, to tell us about your experience and background in insurance.
Sure. So, Jay Fontanini, for the last year, I have been the principal of Fontanini Advisory Services, all one of us working together to bring about change in the insurance industry. But the reality is, I go back long enough in auto insurance that not so far back that we got punch cards and rating manuals, but we actually received submissions for business from agents on paper applications. And then I had to enter them into the computer system, the AS400 system, where they became a part of the permanent record. So that maybe is one of those things that dates me a little bit because I remember mailing floppy disks to agents so they could load them on their computers and rate in their offices. And then obviously we saw things change dramatically with the internet, but 3 decades in auto insurance, a lot of time in pricing and product management, product development, and then the last 8 years or so in specifically focused on marketing within the insurance industry.
Do you care to drop a couple names, companies you've worked
It's an auto insurance company called The General that focuses on making life easier for customers that don't always have things very easy. But like I've spent time, another great name, AIG, spent some time with AIG, spent some time with a non-standard division of the Hartford. And then early on was with a company that eventually merged into the five companies owned by Great American that became Infinity Insurance. So a lot of history in the industry. How about you? Where did you start, and how did you get to this point that you have this fascination with auto insurance?
Yeah, it's a healthy fascination, isn't it? Since it's not going away. Yeah, about 15 years ago is when I got into insurance. I had a friend call me up and say, "We're going to start a carrier from scratch. Um, we are going to have a lot of fun, and we'd love for you to join our team." So it was sort of out of the blue. It was around 2009, 10, when the financial crisis was happening.
Okay.
And I thought, well, this will be interesting, right? I've never sold or participated in a regulated product like that. And insurance is so intriguing.
Now,
So
was that what we would call an insurtech startup at that point, or
uh,
was it
that
more of
was
a traditional
doesn't
insurance
that
company?
predate the term
That's what
insurtech?
I'm asking. Like, were you maybe one of the originators of the insurtech movement?
I doubt it. I'm sure there are others much earlier and better, especially as you and I both know, were some interesting things in the when insurance went onto the internet back in
Yeah.
the day. But no, we were able to stand up this carrier called Elephant Insurance, and that was my first experience working deeply and closely with a lot of insurance experts and learning a lot about insurance. And then I went on to be part of the starting team for a venture capital backed telematics company that we
Okay.
called Drive Factor. And we were very successful outside of the US in launching telematics platforms for our insurance customers, moderately so within the US, but ultimately it was acquired by CCC.
Okay.
And then I spent some time with Allianz, which is a very large insurance company, global, but focused on the US market and some of their organic and um, inorganic or mergers and acquisitions activities that they could do. But the heart of me is just really, really excited about change and making things better, especially in large industries that have challenges and incumbencies. So starting Fenris was the next calling for me. It's why I just really wanted to give back to the industry, just like you, right?
Great.
Find opportunities to fix problems and make it better.
Very good.
Yes. So tell me about the value that, since we kind of talked about insurtech solutions, and I know sometimes putting the two together with incumbents and insurtechs, there's been many great success stories, many great not so great success stories, but I'm curious about your perspective. What is that value that insurtech should seek to provide to the insurance industry?
Yeah, and it's interesting because we're talking about an industry that has obviously hundreds of years of history. There are companies that have decades and decades of this is the way we've done things, and Frankly, there's a lot of comfort in the status quo. I have pretty much now developed a throwaway line when I talk to people, hey, if you're looking for a chief status quo officer, I'm not your guy. Um, so, I mean, the reality is we have an opportunity in the insurance industry as we're essentially stewards of money that the insureds are asking us to hold on to for the day that they need it to pay a claim. And as insurance carriers, our obligation should be how do we maximize our permissible loss ratio so that the most amount of money possible gets paid out to cover claims, and then the least amount of money possible goes for things like policy administration and overhead, the back office stuff that's not that exciting. So I think the principle for any insurtech should be, do they add more value than they extract? And there are opportunities there, pretty abundant to add value to make things more efficient. But it's a challenge because again, there's a lot of comfort in the status quo. There's a lot of effort involved in, changing legacy systems, changing legacy processes, and probably the most difficult of all is changing legacy mindsets. So InsurTech solutions should bring fresh ideas that are focused on how do they add more value and put more money back in customers' wallets.
So the old adage, if it isn't broke, don't fix it. You're saying we've got
Well,
to actually work through that.
well, yeah, I guess the problem is it is broken. And like if you look at even a lot of the online quote flows that insurance companies put people through, it looks familiar to me because it looks exactly like the flow of a paper application from 30 years ago. We've just digitized it, put it in front of people, and we're taking very little advantage of the efficiency that's available through things like pre-filling data so that we don't have to ask the customer the same question 14 times.
It can be, yes, that's a big pain point that I saw when I was running marketing. We had a huge amount of abandonment with the quote flow. And yet other industries, they help you out, right?
They do.
They give you a better customer experience. So talk about what you're seeking to see from a customer focus.
Yeah, and we've talked about this before, but I think the reality is in auto insurance, frankly, we get a little bit of a pass because it's required. Anytime you have a product that somebody has to buy, you don't have to make the experience as good. There's not as much differentiation when you're all asking the same questions, providing the same product. But I think for those companies that are willing to create a more efficient process to make life better for the customers, to make the process easier for them, the reward will be, more customers come to them, more loyalty. And ultimately, as you're chasing profitable growth, the better you get at acquiring customers, it's this virtuous cycle that you have the ability to acquire more customers because you have more to spend on acquisition. So there should be much more of a reward for the people at carriers willing to make a change than it feels like a lot of carriers are pursuing right now. So many initiatives at so many carriers, so it's hard to prioritize those that put the customer first.
I see that you see across the entire spectrum, right, of the insurance value prop. But one of the areas we've talked about is marketing, especially, and
Mhm.
how it talk to me about a little bit more about how you find that can be disconnected, but could be better integrated in terms
Yeah,
of returning value to the consumer and ultimately creating value for the entity
it's
itself.
it is fascinating because I think people readily see the connection between underwriting, how we evaluate risk, pricing, how we price risk, and then ultimately how that works into claims. So you typically see a lot more collaboration inside insurance companies between claims organization and those that are doing the product development and pricing because they're so interconnected. And I think often marketing kind of gets off on an island by itself where it's got a different job. It's about, driving customers into the door. And surprisingly, there's not a lot of thought given to the idea that marketing can appeal to a certain set of customers that perhaps product has designed the product to appeal to, that pricing has set up the right pricing structure to adequately yet competitively price for. So there's a disconnect there. because marketing is off on its own. So just that picture that I drew, I think helps really show what's necessary for like companies to actually make a change and be more successful. And that's collaboration across so that the marketers aren't just broadly growing the brand, but they're actually targeting the customers that the product people have designed the product for, that the claims people are ready to handle. And that interconnectedness can be a game changer for companies that have that focus.
For the companies that have that focus, yes, I would agree. I think it's starting to trend that way. Back 15 years ago when I was starting out, I remember it felt very siloed though.
Yeah.
And I think
And I
that's
think it
starting to
still
change.
is in a lot of cases. But that's one of the things I think we had the disruption recently in the industry where there was a lot of movement. Um, Ideally, that newness for a lot of people is going to help break down those silos. So I think it should be a wake up call for some of those. When I say legacy companies, that sounds bad, but it should be a wake up call that, hey, things are changing in the industry and there's an opportunity here to think differently about how we solve problems.
Yeah, I really am intrigued by a lot of the emphasis that's been on improving underwriting and claims processes. And it has seemed to have left marketing out. But of late, there seems to be a great unmet demand to bring that holistic approach together, right? To connect the full customer journey and the life cycle from start to finish and hopefully even renewal, because we know that lifetime value is really important to making the economics work in a marketing program or any insurance program. But marketing expense is a big chunk of the
Yeah.
efficiency play. So how
Yep.
did you tend to think about that? Because I think we were talking and maybe we thought it was, I would estimate it, say 20 to 25% of all the premium dollars spent on marketing. Your opinion might be maybe a little
Yeah,
bit greater than that.
it can be that high. I think it actually it tends to be lower. But there are places where it's that high. And one of the fundamental thing that's happening, especially you'll see companies paying more than the first term premium
Yeah.
in terms of acquisition cost. And that's the entire thing that's behind bundle and save.
So
You know,
wait, what's the average premium today for a auto insurance policy? Isn't it like 1,500?
yeah, I think yeah, it's in the probably $1,200 to $1,500 range, and I think that there are companies out there that are spending that much or more to acquire customers, but they are likely building a lifetime value model that's looking at how many terms they'll write the customer on that policy. But then, the bundle and save approach is how many different policies can they acquire or can they sell to a customer so it effectively spreads that acquisition cost across multiple lines of business, and then the longer customers will tend to have multiple policies with a carrier, and then it's harder for them to make a change. So bundle and save is much more about um, insurance company economics than it is about loss behaviors.
Yeah, I think there's a huge untapped opportunity there too. It does seem like when I talk to some of the marketers that we work with and carriers or even agencies, MGAs, MGUs, their focus is sometimes just on getting that quote to bind.
Right.
What they what would be amazing, right, is to have a crystal ball to say, these are the kinds of customers that fit our pricing model, our profile, and they stay with us and they're happy and we have other products that we can service them with. And that will create more longevity and more loyalty and indeed make the economics work.
It would be interesting if there was some way to like, I don't know, look at disparate data sets and predict which customers would actually fit better with the underwriting profile of a company. If only there was a way to build a model that you could use for predictions of outcomes. Are you familiar with anything like that, Jen?
I swear. That one hit me. Yes, I'm very familiar with that. That's one of the things that
Oh,
gets me excited.
right.
Yeah.
Now that I've
Yeah.
got you excited, let's keep going.
Well, to put a pin on, I mean, that's exactly why I started Fenris, right? Was I wished I'd had that type of crystal ball
Mhm.
early. I wish I could have been better aligned with the downstream activities. But for some reason at that point in time, it was just get in as many quotes as you can for this dollar amount and let's see where it shakes out. That was a short term thinking, but the longer term thinking is to just brilliantly executed and laid out, right? Is you have to think holistically about the full lifetime
Mhm.
opportunity. And certain things are better fits. And if you just knew that, you could spend all that marketing twice as effectively. And there's
Yeah, it's the Wanamaker principle, right? And I think it's actually
that's
getting
yeah, I swear I didn't think that was a real thing.
it,
But
it is a real thing. And it's a real enough thing that I looked it up and I'm going to probably get this somewhat wrong, but Wanamaker's department store, I think it's in Philadelphia, Mr. Wanamaker, I think it might have been John Wanamaker, actually is the one that said half of what I spent on marketing is wasted. The problem is knowing which half. And it's
your
truer today
words.
than it
Yeah.
was then because he was talking about, newspaper advertising and probably signage in front of the store. Now we're talking about, social media platforms and streaming and over the top television. There's all these different ways that consumers are consuming their media. There's a lot of different ways to get messages in front of them, and it's getting increasingly targeted. So the idea that we can know on a one-to-one basis which customers are going to help us be profitable, who are we adequately and also competitively priced for, the information's there. The challenge is how do we one predict that information, what type of models do we build, and then how do we operationalize it. um, but there are companies like Fenris out there that are actually doing this with actual customers, with actual clients to drive profitable outcomes. So it's possible. The challenge is just how do we get in front of the right people, and often multiple people within organizations will have to agree that this is a good thing. But then we get back to that notion of collaboration where the marketers can say to the product people, hey, how about if I drive you more, not just more customers at the right price, but more customers at the right acquisition cost that actually help your overall profitability? Would that be something you would be interested in? And yeah, they would. It may seem like magic, but they would definitely be interested.
Chase and win more profitable business. I That has been the trend. I believe that maybe with the slowdown of 2023 is when we started to see, at least I started to see a shift to talking more about profitability in
Well,
insurance.
they had to talk about it
They
because
had to talk about it. It was the conversations were ongoing with
historically
every
high
regulator.
combined ratios. You got to start talking about profit when you are north of 100 combined ratio.
Yeah, yeah, that's a tough market. 2023, we saw most, if many companies just turned off their acquisition funnel. They said no to growth.
Yeah.
And that caused a bit of a shock, right, in the system for everybody, because of course there's always a baseline of people, but that inbound, that influx was turned off. They weren't actually actively trying to attract. And in many cases, they were exiting certain states. Um, all all stuff that you know very well. But what's happened in 2024 now that we're starting to see them come back, maybe as early as May is when we saw some of those
Yeah.
funnels turn back on again.
Yeah, we saw a lot of rate increases throughout 2023. We saw, carriers pulling back, increasing down payments, making it harder for customers to buy a policy. And bluntly, they had to do it because they were unprofitable. And you've got to, in order to grow, you actually have to have a combined ratio that's profitable, or you're just digging a deeper and deeper hole. So what's happened now is we're seeing carriers get probably confident that they're going to be rate adequate, and they also have growth goals. So you have this need to now, wow, we're trending towards profitability. We're hurting on the top line. We're not seeing the growth that we need to. It's all about return on equity. So there's this principle that you have to be growing while also profitable to deliver return on equity. So they it's a pendulum that's now swung back to growth. So they're spending. I think as you and I have talked about it, some of them are just spending more, and some of them are starting to spend more smartly.
Yeah, those are the folks that we enjoy working with too, those early adopters that
Yep.
fall into that category.
Yep.
Mm. Being able to check and evaluate even ahead of implementing a new solution, right? To
Right.
understand and back test what the impact would be.
And,
You talked about that as a way of accelerating, decision making and making smart choices for an organization rather than placing bets, making those smart bets. Talk
yeah,
about what that process looks like, if you would.
it is interesting because I think the thing that we're talking about, this idea of taking data sets and training models to target specific carrier outcomes, we're talking about early adopters, but we're not talking about bleeding edge. This is not flying cars. This is technology and information that is available now for evaluation for decision making. It does take some level of discipline and decision that you're going to pursue this, but it's there for the taking for the companies that want to make the investment and be smarter about how they target specific customers. It's possible.
So I did not miss the Jetson reference. I love that because if you look at it, a lot of the predictions the Jetsons made are coming true. I'm still on the fence on the flying cars if those are going to
Yeah. I'm on the
actually.
fence about the robot cleaners too. My robot was less effective than me with a vacuum cleaner. So
Well, I gotta say, you probably need a better robot. I think a robot can
probably,
outclean you, Jay, if you
probably.
if you get the right one. But it is exciting to see the challenges and the champions that are coming through this, those that are accepting and embracing opportunities to change and improve. I think that's been a hallmark of your career, and that's why it's been really exciting to get to
Yeah,
talk to you and
yeah.
understand your philosophy. Tell us a little bit more then about just some of the work that you're doing with other clients in the space, if you
Yeah.
don't mind, just so we can kind of get a feel for that in case there's anyone out there that at this point is like, you know what, we need a little bit of insight, a little bit
Yeah.
of advice.
Yeah, so again, I've been doing this for about a year, but it's really building on the career that I had with a particular focus on. I always like problem solving. I'm not a lather, rinse, and repeat kind of guy. I like new problems. So really trying to understand what problem companies are trying to solve, what challenges they're facing, and then so like that area of business strategy is one of the areas I focus on. And then because of the work that I did primarily at the General, I'm also focused on performance marketing. So what we've been talking about in the lead gen space and how um, we take advantage of the information that customers are providing to us and actively select which customer is going to be best for which company. There's a lot of opportunity there, and frankly, um, it's cliche to talk about low-hanging fruit, but I say the challenge of low-hanging fruit is to find the rotten fruit and then just look up on the tree because there's still some stuff there that's easy to reach. So that's part of performance marketing. And then the other thing I did at the General is as we transitioned from basically being 95% television advertising to a much more balanced portfolio across all of the digital tactics. I was responsible for setting up the measurement framework. So how do we measure marketing performance and how different marketing tactics interact and influence each other? So, ideally, I would be able to help other carriers and customers of mine optimize their marketing spend by looking at how the different components and channels within marketing interact with each other. But
Yeah,
overarching it all is this idea of profitable growth, because in my mind, profit is the fuel that an insurance company needs to grow.
yeah. I think what we've learned too is every insurance company has a different formula that works for them. This is where the magic comes in, right? It's testing and learning to get
Mhm.
into the right groove. It's wild how companies can perform very differently from each other based on geography or product line. So having a framework in mind, I think, is even more important than to measure the strategy.
Well, and you kind of, I don't know if you intended to let the cat out of the bag there, but a key part of that is A/B testing, liftover holdout analysis. So there is, anything that I recommend we test at a small level before scaling. Because I mean, when you make a huge investment to do like a wholesale change, that's terrifying. And you're talking about spending millions and millions of dollars to, adopt CRM systems to do whatever you need to do. But the reality is, if you can test something at scale and have a champion and challenger, have an A versus a B, you can actually see what works best in practice, and then you scale that to the rest of your organization. Anything is possible, and you may find that, wow, that didn't really benefit it as much as we thought, and the return's not there. uh, but my goodness, if we're not testing, we're failing. Like we're simply ignoring the possibility that something that is better is out there. um, So I'm a huge advocate of very controlled tests to see what's working and what's not working before scaling it, and really having sort of this institutional change that can help companies get to the next level.
That is what's really cool. It's very hard to do something like that at a large company that isn't set up that way.
Mhm.
And you've done that. And so you understand how complex that can be because they aren't always even turning on one portion. Like sometimes I say, just test one state or one portion of a state. But some companies like, no, everything is 50 states. And it's just, there
Yeah.
are, there are ways to get around that. But having an expert like you who's done that, been there, understands the complexity could really help accelerate the pace of change because I'm with you. I think that there is change coming, and I think it's foolhardy to think that what's worked for the last 100 years is going to work without change for the next 100 years because we've just seen talk about hurricanes, right, and climate change. There's a complete wave of technology change and led by AI and all of its varieties, in the insurance space that's getting pretty interesting and pretty exciting. So I, for one, am really strapped in and excited about this roller coaster that's coming. Even
Yeah.
the next, we thought we saw a lot of change the last few years. I don't think we've even started with the real
No,
change.
I think you're 100% right. And it's yeah, you talk about artificial intelligence and people start to get squeamish. So there's two sides of it, right? There's this huge opportunity to make things more efficient, and then people start getting worried about am I going to lose my job to the computer vacuum? No, I'm not yet, but maybe someday I won't have to vacuum my floors, and that'd be okay with that. So we have to sort of put things in perspective about one, what's possible, what could we do if we weren't spending our times on tasks that should be repeatable. And then I think the other part of that is we're nervous about AI tricking us. Um, Put all that aside, the reality is we can use machine learning, we can use advanced analytical models to make predictions and bring about good outcomes. I think we have to be careful because you could just as easily bring about bad outcomes. But again, back to the idea of testing and validating that our models are doing what we expect them to is important. But this isn't, again, this isn't like there's not a movie about what's going to be happening in 2050 about how AI changed the insurance industry, but I think it's possible, and if we're basically using those models to fine tune how we do things and make it more efficient, and again control premium growth, put more money back in the customers' pockets, that should be something that the industry champions.
Yeah, I think that they've always been consumer advocates. So this is just part of that extension. Excellent. Thank you, Jay. I think we have had an excellent conversation today, and I really appreciate the time.
Yeah,
And
I appreciate catching up.
yeah, I really think there's a few folks on this that have learned a few things. I know I have, and I look forward to seeing what sort of comments we get when we release
Yeah,
parts of
awesome.
this.
Awesome.
All
All
right.
right.